I'm Tom Huser with the Huser team. Thanks for joining me today. I appreciate it. Today we're going to get started and we're going to go over the 2021 forecast or prediction for what is expected to happen in the Las Vegas residential real estate market in 2021. And also we're going to do a quick recap of what happened in 2020. Quite honestly, I expect exactly what was going on in 2020 to continue on into 2021 for a majority of the year. So let's dive into the data. So here is the key data from 2019 to 2020, just to see what happened in the greater Las Vegas real estate market. So one of the things, I am going to only cover single family homes, not condos. It'll just take too long to do that, but all the data is down here if you would like to take a look. Kind of big picture of what happened in 2020 was that, a lot of people were trying to get out of the dense condo environment, whether it's high rise or just more of tight living. So you will just see big picture that, the sales were down a little bit as more people were moving into single family homes as the goal. Okay, so let's talk about the single family data. So you'll see that right here, closed sales was flat. So if you look at our 2019 sales and 2020 sales, it's pretty much flat with being up 0.8. In my opinion, that's actually exceptional, knowing that, we went through still in a pandemic, but definitely, our first one that we've all lived in. And, everything really just shut down in April and May, and then business really picked up after that. So it was very, very exciting actually to see these numbers flat at the end of the year. Pending sales at the end of the year were up 3%, so that means we've got a lot of good momentum coming into 2021. New listings, this is really critical right here. It's down almost 11%. That was actually new listings coming onto the market, which has created a complete inventory shortage. You'll see here in December of 2020 is 1.4 months versus 2.7 the previous year. So we are down 48% in inventory year over year. Quite frankly, there's two things that lead to this. The first thing is the pandemic and people just not willing, and sellers not being comfortable to put their house on the market and having people walk through it. The second thing that comes here is we get into this gridlock because sellers, when they want to sell their house, ideally they want to buy their dream home, their next home that's better than this, or they want to downsize. However, with what we're seeing with this low inventory right now, there's multiple offers on just about every house. So these sellers just remain in their house. They don't put it on the market because they don't want to get into a competitive environment. And they just sit there so we don't get that inventory freed up. So here's what happened with prices. The median price went up about 8%, and the average sales price went up about 11% year over year from 2019 to 2020. Here is another chart if you wanted to look at this. I'm not going to cover this entire one. You can steadily see, though, our median and average prices increasing each year. But really, the critical thing I wanted to show on this slide was this number of units available. So if we look here, we are just at a critical 3,240 units. And if you just look back at previous years, we always just had so much more inventory to work with. So this is what is constantly making prices go up and getting us into bidding wars, because there's just not enough homes on the markets. Okay, kind of big picture in Las Vegas. So one of the things that we are still dealing with here in Las Vegas is the high unemployment rate. Currently, our unemployment rate is double the rest of the nation as I speak here in January of 2021. What we can see, though, here is what happened at the start of the pandemic with all the job losses. And we can see what happened back here, in the 2008 recession, how jobs just kind of kept getting lost for years. But over here, it was just an immediate spike down. Just everybody got laid off immediately. And then there was this nice pop back up, and we just constantly seeing it rise. So that's kind of big picture there of what happened in 2020. The other thing is driver's licenses. Obviously, these are from out of state people moving in. They're forced to surrender their driver's licenses, or they're supposed to. But we have seen, all the way back to 2018, this goes, kind of around 6,000 a month. And then all of a sudden, this just dropped off. And quite honestly, DMV closed. Everybody was trying to figure out what was going on. And so now we're starting to see that steadily pick back up again towards that 6,000 mark. Again, also back here, people were afraid to travel. Everybody was just kind of learning, figuring out what was going on. So we have seen now this definitely start to normalize more at the 6,000. So the out-of-state buyers are definitely still coming in town significantly right now. So that's really the 2020 data that I wanted to touch on. I didn't want to take too much time. I try to keep these videos as short as possible, even though they do end up being a little bit longer than most people like to sit down and watch. Okay, so looking forward to 2021, let's address the elephant in the room. So there's obviously a pandemic going on. There are a lot of people that are unemployed. They are not able to make their mortgage and rent payments. I am not going to speak to rent. We are not property managers. We are not in the multifamily commercial industry. They were definitely hit a lot harder in the multifamily homes and apartments than the housing market itself. So what we're going to deal with here is the forbearance, which means people that actually own homes and they have had to postpone their mortgage payments for a length of time. So this is down here in the bottom, shows where this came from. This is the home price expectation survey. You can look up the data on that. There's hundreds of qualified analysts here. And of the 2.7 million homeowners, first of all, this was almost double of homeowners that went into forbearance. And then, a lot of them were able to, half of them were able to pull it out pretty quickly. So that got a lot back on track. Now, this is nationwide numbers. This is not just Las Vegas. So 2.7 million homeowners. And here's kind of the pie chart of what the experts feel is going to happen. That the greatest majority, 58% of them, will resume their mortgage payments, and they will stay in their home for at least a year. So in other words, everything's going to be fine. But, after a year, they might want to move, whether it be out of state or bigger, smaller home, whatever that is. Another 24% will list their home within 1 year of exiting forbearance. The other one is 18% will receive a foreclosure notice within 1 year. So that's going to be a fraction of the 2.7 million homeowners. Okay, here's kind of the health of the market. A lot of people, as they see home prices come up, the chatter is constantly, now our home prices are back to 2007 or 2008, and look what happened then. So let's go through that to see how this time is different than last time. So, first and foremost, 2008 was over 12 years ago, and everything in America appreciates over time. So we have had 12 more years of appreciation working in the background than we have since 2008. So here's the big dynamics that I'd like to show you first on the inventory. So when we rolled into the 2007, 2008 residential real estate crash, that is because of this reason right here, the months of inventory. So look at how much inventory we had. We had about 11 months of inventory, and this is again on a national level. We actually had more than that in Las Vegas. We had about 14 months because the builders had built so rapidly. Okay, now look over here today. The builders learned their lesson. They're not outpacing, they're not building too quickly, and in fact, our inventory is extremely low. This here shows in the nation that there's about 4 months of inventory. That is not the case for Las Vegas. I just showed you on the previous slide. In December, we were at 1.4 months. So we are in an extreme seller's market here with just nothing on the market. This will make homes continue to rise in value if this inventory stays low, because the same buyers are fighting for very few homes. So annual price appreciation, this just shows over the last 6 years. Again, this is all national data to show just the big picture health of the housing market as a whole. Down here is very critical, total home equity cashed out. So back then, 2005, 6, and 7, that led up to the housing crash, people were using their house like an ATM. They pulled out almost $825 billion through cash out refinances. Now fast forward to now, 17, 18, 19, homeowners pulled out less than a third of their home equity. So they learned a lesson. They were not using their home as an ATM and pulling out all their money and going on fabulous vacations and buying new cars. So this single-handedly has left our housing market in such a healthier position when the pandemic hit, that there's no way that sellers are going to go into foreclosure because they've got so much equity in their house. So let's roll over here. This statistic here is, shocking to a lot of people. So this comes from CoreLogic, and it says that 42% of all homes are owned free and clear. I just want to pause there for a second to make sure that everybody understands that. And they were talking about in America as a whole that 42% of homes have no mortgage. They are paid off. And this is at all different price points. Okay, so that only leaves 68% of homes in America that actually have a mortgage on it. Okay, so of all those homes that have mortgages, there is still a ton of equity in those homes. They're saying that statistically there's $177,000. That is the average equity in homes that are mortgaged. And all homes in America have, this says almost 59% of all homes in America have at least 60% equity. So the housing market is in such a better position than it was, back in the day leading up to the housing crash. So this is why when the pandemic hit, we did not see chaos in the housing market. So a lot of people always feel that anytime there's an economic recession, which means that, the economy is contracting, that housing prices go down. That is not the case. So statistically, just want to show you this each year, that there was a recession and what happened to housing prices. So we can see there was a little blip on the radar in 1991 where they came down. And 2008, obviously Las Vegas was hit much harder than this 20% down because we were so overbuilt and we had so many investors here. However, this was a housing-led recession. So everybody should be more confident now. Here we are in 2020 in the pandemic. Again, another recession did not lead to a housing crash. So because this had nothing to do with housing, it had to do with a pandemic, home prices across the nation still went up per CoreLogic. Okay, so despite the best intentions of home builders to provide more housing supply, the big short in the housing supply will continue into 2021 and likely keep house price appreciation flying high. And that comes from the chief economist at First American Title. Now, here is what experts are predicting for national home prices in 2021, and then we'll get into the Las Vegas. So you can see there's a wide variation, all these Mortgage Bankers Association and all these different companies. You can look them up to see where they're at. But the positive news here is it doesn't matter which one you're looking at here, none of them are negative. So they're forecasting somewhere between 2 and 6% across the nation. So that big picture means a positive housing market in 2021 based on all these expert forecasts. So obviously each market is a little bit different. So I'm going to dive into the Las Vegas market a little bit more right here for my personal forecast of what I see. So I see the same migration patterns happening as of 2020. So out-of-state buyers will continue to move here for tax purposes. retirement, and others wanting a more affordable cost of living due to remote working. A lot of companies out there are allowing people, especially in the technology firms, are allowing people, employees, to move wherever they want and work from home. Las Vegas is a huge beneficiary of that because we have been helping all of these out-of-state buyers in 2020 come in. Okay, so the vaccine or the quarantine burnout will improve the Strip's business. This will begin to reduce the unemployment rate steadily into 2022. The employment situation, based mostly on hospitality in Las Vegas, has vastly adjusted in 2020. Okay, so what do I mean by that? Okay, we have a vastly different homeowner profile now that no longer relies on the Strip for income. So let me give you some examples. We've had this booming housing market in 2020, but yet the Strip has been devastated with layoffs. So what is happening? Again, back up to the first statement up here. These are people that can now remote work. Employers have learned that they don't need to have these big office buildings. They can have people work from home, and they have allowed their employees to move wherever they want. So they're coming here from San Francisco, they're coming here from LA, Chicago, New York. They're enjoying much cheaper housing prices and much cheaper costs of living, but yet they still have a great income and they're not having to go into work every single day. This is huge for Las Vegas, for our future, because now we're not going to be so heavily dependent on what's happening on the Strip. The good news is this will also actually help the Strip regain itself, because all these people moving in actually are going to enjoy going out to dinner and going down to see shows. So as the Strip gets safer, as we get the vaccine going out, more people are going to be going down there that are actual locals, in addition to out of state and out of the country people coming back, visitors. Okay, so any inventory of homes that must be sold due to financial hardship will quickly get absorbed due to such high buyer demand. Okay, so currently we literally need 3 times as much inventory of homes for sale that we have. We need so many more homes to come on the market. So if this financial hardship does turn out to be anything at the end of the forbearance moratorium, it'll quickly get absorbed. Yes, we never want to see anybody lose their house. Unfortunately, it is just a factor of what happens in the economic world, and there are people here to buy these homes that are coming in from out of state. But we hope as many can, of course, cure the forbearance as possible. Okay, so mid-year in 2021, as the vaccine is successful, we should see inventory coming into the market as more sellers will feel comfortable with buyers viewing their home. They will then be confident to sell once they can allow people in their home. Okay, the inventory gridlock should start to ease as more inventory gets added. Builders will build at a little bit faster pace, but will not allow it to get out of control based on past lessons that they've learned by overbuilding back in 2006-07 that led up to the housing crisis. Okay, once the gridlock eases, more sellers that want to purchase their dream home will come out of hiding. They will now have a couple of homes to choose without multiple offers on every house. So here's what's happening right now. We have sellers coming to us dying to get out of their house and get into their dream home that's bigger, smaller, different side of town, more upgraded, with a pool, without a pool, whatever that is. But the problem is they are locked in because they go, okay, well, if I put my current house on the market, it's going to sell for top dollar, and it's going to sell quickly, and that's great. However, when I do go to buy my new dream home, I'm going to be dealing with that same frenzy on the buy side, and there's going to be multiple offers on that house that I love. And maybe that house that I really love actually isn't on the market because there's just not enough homes on the market for me to find the one that I love. So unfortunately, it becomes a self-fulfilling prophecy that they just can't move. They're just locked up. So as we get more homes on the market, this will also just ease the gridlock. Okay, so kind of big picture now. Interest rates will increase from historical lows, but should remain in the low 3% range. So I think interest rates, got down to 1 point. Maybe I heard people at around that 2.6 or 2.8 on a 30-year. Just depend on the type of mortgage program you were doing. And now we're seeing, trending towards that 3% again. And most likely we'll probably end up the year somewhere between 3 and 3.25. And that is because as the economy heals, the Federal Reserve will no longer continue to keep buying the mortgage-backed securities to keep interest rates low, as they'll start easing that back off. Okay, home price appreciation should slow to a more normal pace around 5%. Again, I showed you what we did in 2020. I think that as a little bit more, inventory comes on the market, that's going to do away with the pressure, the bidding wars. So we'll just get to a new normal pace, but we will continue to appreciate at a nice pace because of all the out-of-state buyers moving in and because the builders just quite simply can't build fast enough. Wow, I know that was a lot of information there, a lot of statistics, a lot of data. But at the end of the day, we want your family to be able to make an educated decision when buying and selling a home. So I like to take the time to make these videos to help you understand the dynamics of what's happening in the real estate market so that you can make an educated decision on selling and buying your next home. Now, I do have to mention that I cannot guarantee any of these results. I am a licensed real estate agent. Therefore, I'm not allowed to guarantee anything. These are simply my forecasts based on the data, a prediction of what I expect to happen in the 2021 year. Thank you for joining me again. I'm Tom Huser, Realty One Group with the Huser team, and really appreciate your time today. Have a wonderful 2021.